Hey everyone, welcome back to Corporate Decoder, the place where we take those super boring corporate filings and turn them into something you might actually want to watch. Today we're diving into a Form 8K. It's not quite a financial bloodbath, but it definitely smells a little like trouble brewing. Think of it as a financial health check where the doctor says you might want to lay off the donuts. So, MIRA Pharmaceuticals, that's our company for today, just got a letter from Nasdaq, which is the stock exchange where they're listed. It's basically a warning shot across the bow. The issue is that MIRA doesn't meet the minimum stockholders' equity requirement. Basically, they don't have enough assets minus liabilities or net worth to be listed on Nasdaq. The minimum requirement is $2.5 million, but as of December 31st of last year, MIRA only had about $2.2 million. That's roughly $300,000 short. Now, the good news, if you can call it that, is that MIRA isn't getting kicked off Nasdaq, not yet anyway. Their stock will continue to trade under the ticker symbol MIRA. So if you're holding shares, don't panic, sell just yet. MIRA has about a month and a half until late May to give Nasdaq a plan to fix this. If Nasdaq likes the plan, they might give MIRA another 6 months to get back on track. So what's MIRA planning to do? Well, they're banking on a few things. First, they're hoping to close a deal to buy another company called MIRA Pharmaceuticals. That deal, they say, should bring in $5 million either in cash or something worth that much. That would definitely solve the net worth problem. They are talking to other investors to get more capital, which is like getting more money. The goal is to make decisions that protect the value of the shares people own in the company. Besides all of that financial maneuvering, MIRA is working on a drug trial for ketamine 2, which is meant to treat nerve pain. They say the first person in the trial has been dosed and everything is going smoothly. They are also saying that the drug might also be useful as a topical formulation, meaning something you apply to the skin. MIRA seems pretty excited about SCAN-I1, which is meant to help with obesity and to help people stop smoking. Those are pretty big problems and they're hoping this new drug is a real solution. Scroll cautionary note regarding I think forward-looking statement. Now here's where the lawyers get involved. The company includes a warning that the future isn't set in stone. These statements about what they expect to happen are forward-looking statements. That means they could be wrong and lots of things could change. MIRA points out that you can find more information about the risks they face in their annual report and other filings with the SEC, the Securities and Exchange Commission. That's where they're forced to lay bare their deepest, darkest fears. This report was signed by Erez Aminov, the Chief Executive Officer of MIRA now. Now step back and take a look at the big picture. MIRA Pharmaceuticals is clearly in a bit of a tight spot. Their stock is listed on the Nasdaq, which is like being invited to the cool kids party, but they're now being told they might not be cool enough to stay. The main issue is their net worth, that $2.5 million minimum. Missing that target is a red flag. It suggests they haven't been making enough money or managing their finances very well. Their plan to get back on track hinges on the SK Pharmaceuticals deal, that $5 million infusion. If that deal falls apart, MIRA could be in serious trouble. Relying on a single deal to save the company is risky. If that deal doesn't go through, they might have to look at other options, which could include selling off parts of the company, finding other sources of funding, or even facing delisting from the Nasdaq. The drug trials and new products are great, but those are long-term projects. They don't solve the immediate problem of the net worth requirement. Those drugs are potentially years away from generating revenue and may face all sorts of regulatory hurdles. Overall, MIRA's situation is uncertain. They have a plan, but it's a risky one. Investors should be cautious and keep a close eye on whether that SK deal closes and what other steps MIRA takes to shore up its finances. They are walking a tightrope, but whether they will fall is something that we can only wait and see. Thanks for watching. If you found this helpful, please like, comment and subscribe. We'll keep digging into these corporate filings so you don't have to.